I'm not sure the industry is ready to import AI into risk models or into collateral metrics. The way the banks are managing the complexity of the allocation of their collateral, they could do with a bit of help of a form of a meta system using AI to help them aggregating the different constraints that they have in different IT systems, so different P&Ls, etc.
How was your panel?
I think it was a good panel because we were talking about clearing, but without falling into technicality. What struck me was the fact that US clearing houses were quite present and quite vocal, which confirmed the fact that for Euronext, with our clearinghouse Euronext Clearing, it's important that we have a voice in this industry to represent the view of the European clearing industry. The other thing that struck me was the never-ending debate about margin transparency. Because I think there's no question, at least for me, there's no question that we owe the market transparency on risk data, on margin. We owe the market risk simulation tools, and we need to front-run regulatory changes.
What would your reaction be if you were a regulator listening to the panel?
The dialogue or the debate between the representative of clearing member, there's one clearing member representative, and the three clearing houses was interesting because you see some form of healthy tension about expectation from the clearing member to provide margin transparency and more services on the CCP side. But the CCPs are also challenging clearing members to say, you need to be more transparent about your own margin model and the way you allocate margin to your clients. And I think that from a regulatory point of view, this is quite insightful about the fact that regulation, CCP regulation, might have to extend a bit more the transparency concept to the CCP users as well, because the end user, the real client, the real investors, the buy side are expecting more in terms of services and transparency from their prime brokers and CCPs.
What unintended consequences have you seen from TPOS 1?
I don't think the move of US stocks, TPOS 1 had serious consequences on our European business. I think the move went well. Some post-trade chains in Europe deal with US stocks, so we had to adjust. We decided to secure our part of the chain in Europe, and we started the conversation about should we follow and should we also implement TPOS 1. Knowing that technically CCPs, markets, CSDs, we know how to deal with TPOS 1 even today. There's no issue there. But the market needs something like 2 years to adjust. So I think that the consequence of the US move has been to put that topic high in the priorities of the post-trade industry in Europe. And I think there's a form of commitment to go for it, but regulation needs to change. And the market participants, not necessarily the exchanges, the market participants need a bit of time to adjust. But we don't foresee revolution or issues out of that.
What are your thoughts on the tokenization of collateral?
On Euronext, we have two assets in the post-trade world. We have our clearinghouse, which is expanding, and we have our CSDs called Euronext Security, which is 4 national domestic CSDs which are working together on one platform and are expanding to. The topic of collateral optimization is in every conversation every day. If you want to expand, you need to help your client to allocate margin the best they can, to allocate collateral the best they can. And it happened that on Euronext we are very, very strong in the repo clearing of Italian debt. We're very strong in Italian debt issuance with our CSD. So we have a voice in the fixed income world, in particular with MTS. So we need to improve our collateral services because we don't have the equivalent of GC pooling or Euro GC plus. So that's one of the areas of development for the future years. And of course, as a late entrant in the collateral optimization world, we're looking at tokenization of collateral because it seems that from far away it could resolve issues in 24 hours trading that you're talking about, more fluidity between the US and Europe, etc. Now, I think the jury is still out about whether or not it's the right technology. Definitely, we're looking at it, but we're also looking at artificial intelligence because in the collateral matrix that exists today, they've been designed in a pre-AI world. And so one could argue that AI could help create fluidity in the way collateral is exchanged and optimized. So yes, for tokenization, but let's look at AI too. So I know it's a lot of buzzwords, but this is the work that we are doing right now.
What is the biggest risk for CCPs?
We had questions for the public about what they consider as the biggest risk for the future on CCPs, and everyone replied, all the others replied, cybersecurity risk, cybersecurity attack. It's fair to say from a CCP point of view that it's one of the main conversations we have with our board, with our regulators, with our clients, and we invest more and more every year to make sure that we are resilient enough to deal with cyber attack the way we're doing it today, because we have attacks every day, right? What I found striking is that although it was an unanimous view from the audience, we had one of the clearing houses, CME, who said that they didn't agree with that assessment because they were ready and looking at cyber security threat across the board, and for them that was not the biggest threat over CCP. So that was interesting to see one of the largest CCPs in the world disagreeing with that. So the debate was healthy, but I think at the end of the day, cyber threat is one of the biggest threats that we have in our industry.